Please read this disclaimer carefully before proceeding further. Welcome, traders, to this analysis of indices. My name is Vic. Thanks for joining me here. US stock market and indices have reached a very important level. And there are a few things that we should be aware of going further into the next week and the rest of this month. And that is why in this analysis video, I'll try to cover majority of the indices to give you the full picture what is happening right now. So make sure that you watch the entire video, even if you're not trading indices or what, because everything is connected. If one thing starts to move in one certain direction, then all other things will get impacted in some way or another. So let's start with DXY because this is the main index that we follow for all the dollar-based currency pairs and the gold, and everything is related to dollar anyway, so far at least. So if you have been following me for some time, you know that we have been looking for a move in dollar from 89, this level, all the way to near about 95, 96 area. And why is that? The reason behind this is very, very simple. The market had created an M pattern here, and because of that, the market is creating a W pattern, and it is supposed to go higher. So it doesn't matter whether we use any kind of specific jargon or finance jargon or anything, just to jazz it up. The fact remains that there are patterns here which get repeated all the time, and the dollar was supposed to go higher from this level, and it is going upwards right now. And if this midpoint of this W pattern is broken, right here, if this W pattern is broken, then we are looking for even further upward move, which may coincide with this previous structure area around here. And that is why I've been talking about 95, 96 area. Okay, this is the same which we saw on Vata and Visage as well. So if I go to the monthly time frame, we see that this is bullish right now. At the bottom we have bullish behavior right now. There was a signal, and the Vata is also saying that dollar is most probably going to go and touch this Vata curve or this white dot, or even maybe both of them. Right now Vata curve is right at 94.5, and white dot is near about 95 level or so. So that is why we have been favoring long positions in dollar from this point all the way to this level here, and that will coincide with previous structure level here. Dollar came down, got rejected by what a wave here, which became support, and now started to go up. Now, again, I've been reminding you almost on a weekly basis that there is a gap available around here on dollar. So it is possible that it may actually come back down to fill that gap up before it starts to continue further up. It is going to go higher, but there can be flash move or something like that, to cover that gap up. Um, but that gap is ultimately going to get filled, maybe not now, maybe after a few months, maybe next year, maybe after a few years, but it is going to get filled anyway. There is a gap around 90 level here. So always keep that in your mind whenever you're having a plan on dollar. Make sure that you always keep that in your mind, that there is something which can pull the price down. Overall, this is still bearish on monthly time frame. So what we are expecting dollar is to go to what a curve here and this white dot, and around there start to go back down. But before it actually reaches there, it needs to first go through this midpoint. If the market breaks through this level, then only obviously we can make a prediction that market may actually continue to go higher into that area. So right now this is the ceiling for dollar right here, right? So go to the monthly time frame, find this level. This is the ceiling for that, for the price structure. Let me actually put a line for you so that you can see what I mean. It's right here. Okay, and dollar has come back to the same ceiling right now. So we can expect a little bit of downward move on smaller time frames, and which can push other dollar based currencies and other stuff in opposite direction if you're looking for GBP USD, Euro USD, NZD USD, or something like that. Okay, if I go to the weekly time frame, the dollar fell, touched the water curve, which acted as support, Now it started to go up, and it is expected to rise to this particular level here if it goes through that barrier we were just talking about, right? That target is available to us on dollar index, and that target is 94 level here, and which is also the previous structure level here. And as you can probably notice that the market is creating a W pattern, right? And it may actually continue to go even higher than that. But for now, what we have is this level is important where it is right now, and also this level, which is 94 level. Okay, this has turned bullish once again, but water wave is not bullish at the moment. So as soon as it turns bullish, it will start to rise even faster. So that is a possibility, but because it is right at the structure level, there can be a little bit of downward movement on smaller time frame. Okay, always read your charts from higher time frame to smaller time frame. If I go to the daily time frame, it has reached the profit target, which I gave in the previous analysis. That this was this buy signal. This is bullish here, and this is the target which has been reached. This has been a very good move. I never actually talk about pips and all that, and that's why majority of the traders who actually send me message saying that how many pips was there, how many pips. I do not actually mention the pips, but if you want to actually look at it, this was near about 51 pips I think on dollar, and this is just dollar. If you look at gold and other currency based other markets which are dollar based, there will be much more than that. So because it has reached the target, and it has also created oops it has also created this W pattern here. I'm expecting dollar to maybe take a little bit of downward move. If it does not start to fall, then it will go straight away there, because this will create an extended W pattern in that case. Just remember this thing. Okay, a dollar ultimately is going to go higher, uh, unless it is coming down to the 90 level to fill that gap up, and that gap is somewhere around here. Okay. In the previous analysis, I also mentioned that. Okay, so let's look at 4 hour time frame. If I go to the 4 hour time frame, this is how it is looking right now. This is the W pattern, and it is standing right there. This is the previous structure level as well, so it can actually fall down a little bit. And what you notice is that we have a gap here available as well. So next week it can actually fall down, but this is a very strong candle, very very strong candle. So if you are looking for a short position for any reason, make sure that you have a solid confirmation on that, because this is looking very strong. Dollar is in going to be uptrend, and on higher time frame also, it is also telling me that ultimately it is going to go where it was supposed to go, and we have been talking about that for months. So make sure, if you're shorting dollar, then you have to be absolutely certain that you are taking a good trade based on the confirmation, not without any confirmations. Okay, so let's go back to the chart. So this is where it is going to go. Now, if I look at the daily time frame, sorry, if I go to the 4 hour time frame and bring in the original analysis. So let me just clean it up. Right. So these are the FCP zones that I gave in the last analysis. The market struggled here, market came back here, struggled a little bit, and then started to go higher. Now, there is a very good pattern which has just emerged here, and this is telling me that the dollar is positioned ultimately to go to near about this level here. This can actually very well happen. It can turn into an extended W pattern here. Why? Because this is nothing, this is very small reaction, and that means it can continue to even rise higher. So because it is right at FCP zone. We can expect a downward move, as I said, but we will only take that on confirmation. If the market actually goes beyond this FCP zone, and if we get a confirmation to the upside, then we'll continue for projected for longer profit targets. Shorts should be for short term and based on very good confirmation, right? These are all the levels which are available to you, which can actually guide you around support and resistance level. These are the levels which you are given in the previous analysis as well. Okay, so this is what we have on dollar. Let's go and look at another one, which is US30, because that is the one that I actually posted in a Telegram group, and also in on LinkedIn and other places. Okay, you should be aware of this, what's happening on US30. Let me reset the chart, clean it up. Okay, now this probably is not the best one. Okay, yeah, right. So US30, this is the first time market has started to do something like this. What I mean by that, if I bring in indicators, so let's simply bring Bollinger Band. Okay, nothing too complicated, very simple. Now remember, this is the one around Corona. Market went up and performed as like kind of a retest, or you can say a little bit of correction. But since then, it has been in parabolic move. It has been above the mid of the Bollinger Band consistently, right? There was only one test. Now what is happening here is, this is the first time this week the market has actually closed below the 20 moving average, which is the mid of the Bollinger Band. And you can also see that the Bollinger Band is actually started to go sideways, and it is also creating this sort of pattern here. So any break below that can actually lead into little bit of sell-off. I'm not saying that that it is going to crash or anything, because so far it hasn't shown anything like that. But remember, all big moves actually start as a smaller move first, right? So if the market starts to go down, because it has also broken this trend line. If the market starts to go down, wait for a confirmation and you can look for good short opportunities. Okay. And if you manage your trade well, and if the market continues to drop, then you can actually have a very good trade opportunity in front of you. You can actually keep it for a long period of time. And this is also a gap which has been left here. Just to put it out there, I'm not saying that it is going to reach there. It may or may not happen. It may take years. It may take decades, right? So, um, but something is happening around here, because we see the Bollinger Band is going sideways, and the market has broken out of this trend line. There is a pattern wedge sort of pattern, and the market has, for the first time, closed below 20 moving average. And these two candlestick patterns are also showing me that this is looking bearish as of now. Okay, there is another thing that you can do is, because a lot of people, actually a lot of traders, look at the moving average. 200 moving average is kind of indicator um, of bullishness or bearishness, right? So let's bring that up. So this is 200 moving average. So 200 moving average is right there. This is the weekly, so that's too far away, right? So this is the one which is the nearest one, and that is the daily time frame. And this is right here at this particular level, and still it's still far away. So you see the market has started to shift. It has started to go this way, and in this process it is also creating an M pattern. Right now it is struggling with the midpoint. If it starts to fall down, then it can come down to this support area, and if that is broken, then we are looking for this particular level here, which is also the previous support here. So this is a very, very important one. Watch out if you are actually invested in stock market. Make sure that you are actually seeing what watching it properly, watching it very, very closely. Um, and let's look at what envisage on US30 for a second, so that you have better idea. So if I go and look at monthly time frame, on monthly time frame, for the first time after so many months, red has started to appear. Okay, and we can already see that this month so far has started to look like an engulfing candle. It is not exactly engulfing, but it is strong enough, and it is kind of engulfing the previous two candles as well. So this is also looking bearish here. If I go to the weekly time frame, we can see that the market was bearish, the red color, and it has started to show a sell. Because this was red, any buy signals were were of low priority or low probability. That has not worked out. It never reached its profit target. It could actually do that, because markets can do anything. But as a trading point of view, because the bottom one is red, that's why we were looking for short. Now if you look closely, right now this was an engulfing candle. Let me actually increase the size of it so that you can see. This is an engulfing candle, and because it is inside the water wave has gone red. This is already red. We have got a sell signal, and this is the target, which is near about exactly the same level as the previous structure support here, like between this support and this support. And if I go and show you what support we are talking about, that's exactly where it is. Let me just show you the weekly. So between this support and this support, which is going to be somewhere around here, right? So this is what it can do on US30. So beware of that. However, there's another scenario for a day or so, or for some time, it can go up a little bit. Why? Because it has just crossed the moving average. That means there can be a reaction to the upside. So on smaller time frame, there can be a little bit of upward movement. So beware of that. It can actually go slightly up, but it has on higher time frame, it has started to look a little bearish now. So these are two scenarios. Okay. Let's look at S&P 500, which is going to be similar, I'm guessing. If I go to the monthly time frame, remove all of this. So on S&P 500, the market is looking bearish for the first time. Now, if you remember, the last year at the start of this year, actually, I presented a case on S&P 500. If you remember that, if you don't remember, then go and check it out on YouTube. It's available there. Look at this candle. This candle is kind of hammer candle, right? After this sort of candle, usually the market creates a very negative sort of candle. So far it has not done that. So far it is bullish, but we still have time in this year, and the market can actually come back and create something like this candle can turn into that, or it can turn completely as a bearish candle also. But what we are looking for is this sort of rejection from the top, and this can actually start to happen now. And for that, what it will have to do, it will have to start somewhere. So let me go to the monthly. So that is what is probably going to happen, and it may reach this particular candle here, this one right here. It can go even lower to this structure. Because why I'm talking about these candles, because this is the previous structure here, this is another structure here, this is another structure. So if it starts to go down, then one of these candles will act as support. This can also act as profit target if you're shorting this market for any reason. So if I go to the weekly time frame, what is happening there is that's again similar sort of story. The market has been bullish, very very bullish, parabolic, because it is above 20 moving average all the time. This is the first time it has started to come back down. So far it is very bullish. It is more bullish than US30 as of now, because on US30, as you can see that it has fallen through that 20 moving average, mid of the Bollinger Band. In this case, that has not happened yet. Okay, but it has started to show weakness. So let's go here and look at US 500. This is bearish on weekly time frame. This is red. This is engulfing. We have signal, and this is the target that we are looking for. This is the previous support. This is the previous support. So somewhere in the middle, we can expect this market to fall down. Okay. So this is what we have on S&P 500. Let's very very quickly look at Nasdaq as well. Nasdaq. Let's first go to chart here. Okay. On Nasdaq, let me clean it up. Nasdaq is similar sort of story, but let's look at monthly time frame. Actually, let's start 12-month time frame. Similar thing, which I mentioned on S&P 500. Similar sort of candle, but it is not that bad as compared to S&P 500. But this candle is looking like it can turn into upward rejection wick sort of thing, like inverted hammer, or pin bar or sort of thing. Maybe it will fall down a little and then come back down. So this has started to happen, and you can expect market to find some sort of support here, or somewhere around here. This is also a level of support here, and where we have 220 moving average as well on monthly time frame. If I go to the weekly time frame, what we have is the market is still not that bearish as compared to US30. US30 is far more bearish than any of these two. either of these two. So now, but it started to go down, and we have seen these sort of moves before, so we cannot expect like huge correction down. The maximum that you can expect is something like going to the 20 moving average. But if it actually goes beyond that, then we can looking for further movement down, pretty much like US30. If you're interested in learning how to analyze the markets the way I do using Fibonacci Confluence, then head over to vikinsa.com, and under training section you'll be able to see core strategy training program. On this page you will be able to see the testimonials of previous students and also look at the brochure. The brochure has a lot more information, including the course structure and the Fibonacci Confluence training program curriculum. This is a very extensive program in which we cover basic core Fibonacci concepts along with the advanced concepts to analyze the markets with high probability. If you're interested in joining this program, come to vikinsa.com, and under training section you'll be able to see and submit this form.